Right, okay, welcome back to the channel. We've got Bitcoin currently trading at $19,398. We've just recently dropped a level of support, not a major level of support, but the reason for that was due to the non-farm payroll data on Friday, which was released, which is US unemployment. So employment in the US was higher than expected. A negative impact on the market was created as a result of that, and there's a higher probability that the Fed can increase interest rates by a higher basis point than what they previously would have if US unemployment was poor. So had a negative reaction on the market. We just dropped our recent support level. It wasn't huge, a huge drop below that level. We're still hovering, making higher lows. So positive impact on the market. Half of you guys are asking for tutorial educational videos. The other half are asking for current price action, real-time price action. So I'm going to mix it up a little bit today, and we're going to go over some price action, but also some altcoins that have absolutely been slammed during the start of this bear market and that are in accumulation stage. And we're going to look at how you guys can take advantage of that. So it's all about compounding, consolidating, and we'll look at how we can compound within this range and how we can take advantage of that. So let's get straight in the episode, guys. Let's get into it. Okay, before we get into the markets, I just want to explain the idea of accumulation versus distribution. So it's an idea of accumulation versus distribution where the smart money is either accumulating at certain levels or distributing at higher levels. So the reason why they're doing that is to try and get a better deal at some point in the future. And it's really about time in the market and time out of the market, more importantly. You'll often hear this phrase, selling may walk away, and it's not just a saying. This is what happens, guys. This is May 2021, smack in the middle of the bull run. That's what happens. Selling may walk away. You hear of Rectember. That's what happens in Rectember. And it's institutions, it's smart money just walking away, going on holiday, having time out of the market for a few months and letting retail fight amongst themselves, letting the small players fight amongst themselves. And they'll come back in a few months' time and rinse and repeat the idea. So that's an example in the middle of a bull run. Selling may walk away. You've got Rectember there. And it also happens in the bear market as well. So there's a higher probability of this happening, and people just rinse and repeat the markets. You've got, where's May? You've got May here, selling may walk away, and we've had Rectember as well. So hopefully it's going to have a positive Q4. There's consolidation happening now. There's lots of accumulation happening now at low levels. There's certain coins that have been dropped between 95 and 98%. I'm going to show you guys a few of them. So let's have a look now. First one we're going to look at is Theta, and you'll see going back in the previous accumulation phase of Theta, if we go back to the areas of September 2020 to December 2020, it was in an accumulation phase for 78 days. Once it's broken out of this accumulation phase, we ended up with gains to the next high of 206.6%. Started another accumulation phase before the start of the bull run of 2021, started in December, and then it had an accumulation phase of 42 days. And then following that accumulation phase, we had a 409.6% break to the swing high. So all-time highs coming out on this 1586 on Theta. And you can see that we're in a different state of the market now. We're in a bear market, and this has bled so much that it is back at previous levels to going back to 2020. So it's in an accumulation phase. This accumulation phase is lasting a lot longer than the previous ones, 153 days so far. And once I see a break of this to the upside, I'm expecting my target levels between the areas of 421 to 441. So that would be gains of, from the breakout, 137% to target 1, the bottom of target 1, the bottom of target 2, 217%, which is $5.51 to $5.94, so 243%. I mean, this is not a huge target level that I'm putting here. It's certainly not all-time highs. If you look at that in comparison to all-time highs, this relates more to the previous major swing low of the move. So that's what I'm looking for. And the way that you can trade these It's been in there 153 days so far. This is a 3-day chart we're on, so each one of these candles is 3 days. And how many times has it hit the support level? How many times have we had a reaction from the bottom of this zone? So you've got 1 there, 2, 3, 4, 5, 6, 7. And don't forget, each one of these is 3 days. So 7 times on a 3-day candle. If you were on the 1-day chart, it would have been more. So if you're accumulating at this level, even from the bottom to the top of the range, you're looking at 68%. So if you manage to offload a couple up here, it hasn't hit the top of the range too much, but if you manage to offload a couple here and accumulate further down here, you're setting yourself up for a good move there. Like I say, a big move from where we are now to the bottom of target 1. You're looking at 300%. So it's not financial advice, but you can see how far this has gone to the downside. In fact, let's calculate how far Theta has gone from its all-time highs. You can see why it's better to accumulate at these levels rather than dollar cost averaging over a period of time. So from the top of the move to where we are today, Theta has dropped by 93%, so absolutely battered. We'll have a look at Cardano next. Right, okay, Cardano, similar to Theta, it's trading in quite some range here. So if we just put our area on there, I just like to put a square box around that. And you can see you've had a couple of opportunities to offload at the top here. It doesn't matter if you don't offload to the top, just accumulating at these bottom levels here, where you get Cardano at 43 cents, completely makes sense to me. Remember, not financial advice, but completely makes sense to me. What you quite often do get, and you have to prepare for this, and this is why laddering in or dollar cost averaging at these lower levels is much better in my opinion. What can happen is you can get a pothole effect where you're going to accumulate, dip down before you come up and move. What that does is resets the market. If the sentiment and if momentum's high at the time, you might not actually get this effect, but this is why accumulating at these levels is always good. So we'll have a look at a couple more, Solana and Phantom, and we'll also have a look at something that not a lot of people talk about that happened in 2019, which shows where you can get some gains from accumulating at these levels. Okay, so we'll have a look at Solana next. Right, okay, Solana. We all know Solana, when it was previously in its accumulation phase, this was actually in the middle of the bull run of 2021. So this accumulation phase lasted for 3-day chart. Again, this one, guys, 138 days. So 138 days. And once it did finally break out of its range, we ended up with gains to its all-time highs of 361 or 360.55%. So that's what Solana done. And what's the difference between what it did then and what it's done now is we can't be expecting this kind of a run from this kind of a move. What we're likely to get is longer consolidation. You're going to get little swings to the upside, but those little swings could quite easily be 100, 150%. So just got to prepare for that. So if we just add in our accumulation area from where it's currently standing, and that is for 147 days so far. So bottom of the range to top of the range, you're looking at an area, doesn't look much, but it's actually 68%. So if you're accumulating at these bottom levels here and distributing at these top levels here and just building your position over an amount of time whilst it's in this accumulative phase, what you're doing is you're building on your position, you're compounding your position. If you put $100, $1,000 in at this area and you manage to offload 20, 30% at this area, buy back down at this area and rinse and repeat that a few times, what you're doing is compounding and building your position over an amount of time. And that's what the smart money is doing. They're waiting for the accumulative phase. Once the market's being pushed down by the retail, once everyone's been rinsed, once the market's reset, they can start accumulating again at these levels and then rinse and repeat over an allocated amount of time. And that's what I meant earlier on by time in and time out of the market, just for that reason. Selling may walk away. They're quite happy to be out the market for a few months, let the market bleed 60, 70% in the crypto market, and they're quite happy to come back and accumulate at lower levels. So some of these altcoins, 95 to 98%, we all know some of the losses that people have had. We know what happened to Luna, so you got to be careful with these. And if it is altcoin, diversify your portfolio, just a small amount, and make sure that you've just got a handful of the good ones. So not financial advice again, but I'm just showing you how you can build your position over an amount of time. If you dollar cost averaging in over a period of 3 years, what you're ultimately doing is you're buying here, good level, you're buying here, you're buying here, you're buying here, and you're buying here. You might buy here, which is still a high level. What you're doing is you're bringing your average down to about the middle. So you've got to give yourself quite a long time before you can break even in this instance. When you build in a position over a period of time at these lower levels, even a bit to the downside, you can add to that position if you're not putting all your eggs in one basket. And what you do is you just consolidate and you're swimming with the whales and you get your chance. All you need is a little run here and you've got 100, 200, 300% gains in some instances. So it's just something that I like to do with a longer term to mid-term portfolio. I'm not holding on to these forever. We're in the middle of a bear market, so I just want to try and build my position before ultimately we get the next run like this, and I want to take advantage of that myself. So we'll have a look at Phantom. Actually, before we look at Phantom, just have a quick look at the Wall Street cheat sheet. Not sure if any of you guys have seen this before, but if you look at the Solana chart or any of the altcoin charts, you'll see similarities there between the Wall Street cheat sheet. So this is a state of emotions, and you go through hope, disbelief, optimism, belief, thrill, euphoria at the top. This is where everyone wants to buy, everyone's buying here, and then you get complacency, anxiety, denial, panic, capitulation, anger, depression, and you just rinse and repeat the cycle again. So we're probably in the middle here between capitulation and anger. We're going to go through depression over the course of the crypto winter. We'll have disbelief just before the next run. That'll probably be in line with the next Bitcoin halving. And then we can ultimately have the optimism, belief, thrill. But what we want to do is we want to be taking advantage, and we want to be taken out at these levels over a period of time, and then building at the lower positions when everyone's angry, when everyone's panicking. So, okay, last one, Phantom. And this has been a long accumulation phase. Phantom had troubles during the bull run, during the end of the bull run. It had its developer, its main developer that left. And Phantom is been in a range 4, accumulative range 4, 156 days now. So Phantom's pretty much at levels back at where it was in January 2021. So it's currently sitting at the bottom of the range. So dollar cost averaging it. If you've done your research, if you've looked at Phantom, and if it's something that you want, dollar cost averaging in at these levels makes sense to me. It's currently at a good level for that, 22 cents. Its all-time highs were $3.47. So a move to its all-time high from now, and it's not going there anytime soon, remember, 1,510%. So what's that as a drop? 94, 95%. So that's been battered as well. Right, okay, so remember, dollar cost averaging at these areas, and then you can offload at, I mean, if you look at the previous swing low on Phantom, you're looking at areas of, from where it is now, 363% gains on Phantom. So not financial advice. Remember, it could have the pothole. If it has the pothole, what do? Take advantage, build your area at these levels, and then it'll come back and go for a run. So just prepare for it. Make sure you don't put all your eggs in one basket, because if you put 100% of your position in there and it goes down to there, you've got to wait for it to come back up here before you break even again. So make it worth your while and make it to your advantage and carry on building on those areas. So last thing, I just want to show you the Bitcoin 2019 run. Okay, so we're on the Bitcoin trading against USD on the all-time history index 3-day chart. And what I wanted to show you is, if we just go back in time, this is something people don't talk about, because we know about the 2017 run after the halving. We know about the 2021 run, the 2014, 2015 run. No one actually talks about the 2017 run. So let's get this up on a better scale. So 2017, we know we had the all-time high around about 20 or just shy of 20,000. And then we had the crypto winter. What happened after that? consolidation. Remember, this is exactly what we're talking about. It was in a consolidative state, and bump. You've got your pothole, and then you've got your run. So this was the 2019 bull run that no one talks about, and it's because it never made all-time highs, but sitting from the lows to the high of that run, you're talking 333% gain. So we can take advantage of that if there's anything else that's similar to that between the two runs. So even if we get a 50% run that goes to 45,000, 40,000, then we could take advantage of that, because ultimately we're sitting at around about the 19,000, 20,000 range at the moment. So that's what I mean about the accumulation phase. That's what I mean about the pothole effect. And then ultimately you break this high, and then the market sentiment can reset, and we can go and start another run. So that's something that a lot of people don't talk about with the 2019 run. It's around about a 50% run. So if you think of 50% of a bull run, all-time gains in respect of that for altcoins and for Bitcoin itself is huge as far as percentage-wise is concerned. We've got to get the all-time highs out of our head and think in percentage gains. Think of higher probabilities as what's likely to happen. Go back into the charts, look what's happened in history, and remember, take advantage of the accumulation phase. So if you did like it, guys, hit the subscribe button. If you're not already subscribed, share it with your friends and like it, and I'll see you in the next video. Take care.